Happy Monday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Monday, October 9th, 2023. We'll start with our executive summary this morning. So Brent crude oil is up 4% today to $88 a barrel, which may be the start of an ascent back to the mid-90s or higher after the recent sharp correction unwound some of the crowded positioning. For crude to rally well into the $100 plus barrel range, investors need to see the conflict between Israel and Hamas devolve into a proxy war between the U.S. and Iran, which has denied involvement thus far. Obviously, we're praying for everybody out there, particularly those who are not involved in the conflict. Most of us just want to live our lives and be happy. Number two, the bearish price action across global sovereign debt markets may continue this week with German CPI and U.S. PPI on Wednesday, U.S. CPI on Thursday, French CPI, and U.S. Michigan consumer confidence or consumer inflation expectations on Friday, as well as a heavy spate of Fed, ECB, and Bank of England speak this week. And lastly, number three, our macro weather model is currently generating a neutral 3-month outlook for bonds in the US dollar and a bearish 3-month outlook for stocks, commodities, and Bitcoin. A neutral to bullish phase transition in the component signal for aggregated US dollar positioning caused the composite signals for stocks and bonds to deteriorate and the composite signal for the US dollar to improve. Historically, extreme bullish positioning in the US dollar has been bullish for the US dollar and bearish for all other assets. All right, transitioning to our daily rundown of cross-asset performance. We'll start here with U.S. equity sectors. S&P up 0.5% week over week, being led higher by tech, up 2%, 2.6%. Communication services up 2%. So this is a reversal of the trending performance that we've observed throughout the summertime. You had energy down 5.2% week over week. Utilities and consumer staples down roughly around 3%, respectively, week over week. Getting into factor performance, S&P up, as I mentioned, 0.5%. A big dispersion in terms of growth, outperforming significantly, up 2.1% week over week versus value down 1.5%. So as I mentioned, a big reversal of what we've been observing over the past couple of months there. Geographic performance up to S&P 500 up 0.5% week over week. India is leading global geographies higher, up 0.7% week over week. You got Brazil down 4.23% week over week. And then you also have Japan leading to the downside as well at minus 2.2%. In terms of fixed income performance, the core ag is minus 1.4% week over week. TLT continues to stumble, minus 4.4% week over week. You also have LQD, which is investment grade credit, which is a lot more duration than it has had in decades past. So trading a lot more like the long bond than credit in recent years at minus 2% week over week. Transitioning to currency performance, dollars is exactly flat week over week here. You got the Swiss franc, safe haven currency, up 0.6% week over week, and then leading to the downside. You got the Canadian dollar off 0.9%. Off minus 0.7%, and the Chinese yuan off 0.6%. In terms of the commodity markets, so as I mentioned, was a big correction in crude oil, but now starting to recover. But commodities on a week over week basis down 4.2% in terms of the headline to the broad basket. Crude oil was leading to the downside at minus 8.3%. Bucking the trend there, you have agricultural commodities up 0.8%. Maybe the start of something that we can, in terms of feeding upon itself, in terms of energy prices rallying, dragging up all other commodities, particularly food commodities. This is certainly a movie we've seen before in financial markets, and so we are definitely got our antenna up for that dynamic. And then lastly, crypto Bitcoin is exactly flat week over week, but the rest of cryptocurrency space is off pretty. Is starting to correct here. You got Solana leading to the or XRP leading to the downside, actually at minus 5.6%, and then things like Ethereum down 4% week over week. And then lastly, transitioning to my Longbow dashboard this morning. So nothing to call out from the perspective of the trading ranges, nothing overbought, oversold in terms of what to do from a tactical standpoint. So we'll just leave you with some levels on the S&P to get your day started here. So S&P 100 you got downside to 42.15, upside to 43.78, getting close to that upside there, a lot closer to the upside, a lot more downside than upside in this range here. Short-term and medium-term momentum is bearish. So this is for now, at least for now, in terms of the signals, a sell the rip kind of market here, at least according to the Longbow dashboard. So we shall see how this is evolved. But this is Darius Dale presenting our macro minute for Monday, October 9th, 2023. Everyone have a wonderful week. Best of luck out there. We'll catch you back here tomorrow. Cheers.